This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
All right, welcome back to the show. You guys can follow me on Twitter at Backup Bradley above at the top of the screen, and everything that we're talking about here today, letting you know the Ripple IPO watch is still on, watching like a hawk. And I feel like we should watch now more than ever, because with the idea that there is now a XRP Ledger Foundation, I think we are seeing the preparation for a real true decoupling from Ripple, the blockchain infrastructure company, and XRP, the ledger, and the XRP, the digital asset. No, I do not mean that I think that Ripple will stop using XRP. But what I do mean is that I believe that we are going to see a clear realization to anyone who absolutely has been doubting it, to the Tone Vays of the world, that Ripple is a company and XRP is the asset, and there is huge use case for it. And I think not too long from now, everybody's going to hear about it and they're going to know about it. And this is what it's going to take for Ripple, I believe, to truly IPO away from something like the XRP Ledger and the asset, and still be able to use it as a part of their company model and a suite of products that they offer. So, okay, so let's go ahead and move on here. What we have here to set this up is really a couple things. We're going to talk about the internet versus the internet of value. And what's important here is we're going to talk about, for one, this little clip here with Jeremy Allaire from Circle and his YouTube channel that he has. And he just has a great pipeline of people that he knows in the industry, because he's in the industry himself. And he really, really just tackles some great stuff. So we're going to hear what the gentleman from Algorand says about USDC, stable coins, and smart contracts. Let's listen to that, because this is important about getting into and out of the new internet of value as it is. And then we're going to take a look at some comments from Mike Novogratz, who talks about the fact that he believes Bitcoin is really set to 60x, which means, really to the size of the gold market. And it's quite, to be honest with you, there's quite a conversation there. So let's go ahead and get started. Here is the clip really quickly here from Jeremy Allaire and the gentleman from Algorand. Silvio, let's hear this.
I guess an obvious question related to some of the announcements we've recently made is, what role do you think USDC can play in the Algorand ecosystem?
Well, let me start with the obvious, right? So somehow we are going to create together and the rest of the community all kinds of new assets, right? And the people will enjoy using them, owning them, and so on and so forth. But the first problem we're going to have is evaluating them, giving a value to these assets. And I really believe that USDC is going to play a major role in creating somehow a common reference system in which we actually, because everybody understands what the value of the dollar is, but it is going to be like, if you want, a flywheel in this very complicated mechanism. That said, then we have actually our particular use and reliance of USDC and stable coins. And if you promise don't to grill me before time, for instance, speaking of smart contracts that you believe and we agree that are really one of the major gifts of a blockchain, is going to be, we think that there should not be gas in our right. Smart contract, but we should use stable coins in order to somehow pay for the execution of this thing. Yeah. Because very often people are say the contract is expensive, the contract is low, and even worse, I cannot even budget for how much money should I put aside to run my smart contract. So we are going to architecture in a way in which we are going to hide this away from the consumer, and they can budget properly for the smart contract we want to execute. And so this is going to be a piece of a bigger architecture that we have in mind for smart square contract, we call them, because they're going to be smart contracts that for a change are going to be really smart. So.
It's really great stuff from Silvio there. And basically what he's saying is that, we're talking about the use of stable coins. Gas fees are too high. Well, I'll tell you something. This is the only people who really figured that out because, that's about the XRP Ledger Foundation. But I wanted to point out here really quickly, this is really Josh Edwards right here talking about perfect end to another great week and pointing out that Flare is delighted to announce that Celsius Network is officially supporting Flare's Spark distribution. And shout out to them. They have been getting a lot of companies to come on board and to honor the airdrop that's going to take place for the Spark distribution. And the Flare network, as you know, is going to act as a bridge between the XRP Ledger and Ethereum as a two-way bridge there. And what's interesting about this is that you see that not only Algorand understands the deficit of something like the Ethereum network and the gas fees that come along with that. What he's basically talking about is if you're staking Ethereum, and a lot of people are staking Ethereum, you're creating scarcity, the price goes up, and then when you go to process a smart contract, it's going to cost more in the transaction fees. It's pretty simple. There's a problem there. As a scalable solution, that's a problem. So I think we're seeing things like Flare, and we're seeing companies like Algorand come out, and Algorand specifically pointing to stable coins being the settlement there in the smart contract. That way, the customer and the sender and receiver of these contracts understand exactly what the charges are before and after sending them. They understand what I got to pay to receive this contract and to execute it. Now, with that being said, I still believe we're going to see XRP settle these many different stable coins because I see an ecosystem with tons of coins, stable coins, CBDCs, tokens, security tokens, cryptos. I see just tons of that really kind of returning back to the early days of barter system turning into money where, this particular village or town might have used seashells for money. And then this particular tribe may have used, deer antlers, you know what I mean? It's like, or furs, right? They considered that value. And then there was these people that would be in the middle that were able to trade these things to give you what you need because they dealt with both different regions or areas where there was different forms of these accepting things that were accepted as money. I think we're moving back to that, but in a digital way. And the innovation is going to allow us to tokenize anything you want that has value, and you will be able to settle it because we'll be able to use something like XRP in between it. Okay, now, coming back to the XRP Ledger was built for payments, and the XRP Foundation was built to support the XRP Ledger. From all of us at Ripple, we're looking forward to building with you, and that's really great because that's on the announcement of the XRP Ledger and the things that they're going to be doing, which we covered the other day. Again, this XRP Ledger Foundation appears to me to really begin to make that clear decoupling and that separation between Ripple, the blockchain infrastructure company, and an XRP Ledger, the universal highway, which will have a foundation nonprofit behind it to oversee what goes on in the development going forward in the future. Now, we know that regulation-wise, we've had recent regulation going forward in advancement of crypto with the OCC being able to custody crypto at federally chartered banks and now being able to hold reserves for customers who are going to issue stable coins. Now we see the SEC issue a no-action letter for security tokens and alternate trading systems that actually deal with security tokens. This opens a massive door to the entire derivatives market and the real estate market of tokenizing real estate and derivatives, by the way, all the stocks that you can imagine, all the commodities you can imagine being tokenized and eventually run through this system. So this is where we're going ultimately is the internet of value, all the money. So now here we look at, while the move of the OCC is positive, it's important to recognize that a majority of banks simply do not possess the correct infrastructure to provide safe and compliant custody solutions. Now that's right. That's absolutely right. Banks are not innovators. So This is where you see things like, I believe, like Standard Trust or Standard Charter, whatever it is, it's connected to PolySign. I think those are viable solutions. I think that you see the buy and sell side on the front even become like a Kraken, could offer these solutions third party for the banks themselves. There's going to be, or Curve could be a custody solution for these banks, right? They don't have to really build all of this themselves. And in fact, I don't think they're going to. In a market that is emerging, you see in a process of it growing, you will witness different mergers, acquisitions, and partnerships. And I believe we are right here on the edge of that happening again. We saw Fidelity partner with Coinbase, right? We saw TD Ameritrade and ErisX. We saw some of this happen already, but it's going to continually happen as the market gains steam and traction, especially now that we're seeing the regulatory agencies provide the kind of clarity, and we need more, but we're getting more clarity all the time. But as we get more clarity and that defined framework that we're going to need, you're going to see the institutions and the legacy firms come in and scoop up these companies that have been the names in this area, in this space since day one. Now, I think that's nothing but good news because, look, that's the way this works, right? You think the Bank of Americas are going to let something like Kraken outdo them? No offense to Kraken or the exchange. I mean, I've never used it, but I'm sure it's a fine platform in a company. I'm just saying that, the legacy firms and traditional banks and companies that are in the payment space have an opportunity here to buy out these other companies because they've done the work, they've done the building, the fintech companies and startups and entrepreneurs and the venture capitalists have come in here and done all the legwork and gone through the tough days to get themselves to survive long enough to make it to a place where they can be acquired by something like a Fidelity or a Bank of America and so on and so on. So I think we're at that moment, and that is how very quickly, because what is this? We're talking about the private sector coming together with financial institutions, and in some cases even the public sector like government sectors, right? So let's keep going here. No internet, no problem. Venezuela gets Bitcoin satellite node. Well, I'm going to tell you something. Shout out to XRP Crypto Wolf, Michael Val 5 links to Denarian, and anybody else that sent me material. I appreciate each and every one of you. But here is what I want to get at here. Venezuela gets a Bitcoin satellite node. Okay. Do you think they're the only ones? You think it's just Venezuela? Do you really think that Venezuela is now faster and more advanced in this space than the United States at this point? Oh, I don't think so. And I don't mean any harm to Venezuela. I'm just suggesting that if you think that Venezuela is the only one dealing with satellite nodes for cryptocurrencies like Bitcoin and others, I think you're missing it. And I think you're missing it by a long shot, because I think it's every country that's involved in this space has got satellites and nodes up in space. And it has to be, because if we're ultimately moving to a 5G network that's going to reach the masses from every corner of the world, not that the world has corners, but if we're going to reach everybody, you're going to need to have that 5G coverage, and satellite coverage is how it's going to happen. You're not going to be putting up telephone poles and towers everywhere. It just isn't going to work like that. Now, here we start to run into the Bitcoin conversation about the idea about how big it can get. Listen to this from Caitlin Long, who has been an amazing advocate for cryptocurrencies out of Wyoming. And listen to what she says here. Whoa, what a speech by Cynthia Lummis, almost certainly about to become a U.S. Senator, already a representative of the House of Representatives, says why Bitcoin is a store of value, which may rise to be an alternative to the U.S. dollar. I bought my first Bitcoin in 2013 because I believe in the economic power of scarcity. Now I'm a hodler. Go Cynthia. Well, listen, this goes to the greater conversation of what Michael Val5Link shared with us here. Bitcoin has 60x market expansion potential, says crypto investment firm Galaxy Digital. Here's why. When we look at it, they actually make a pretty solid point here, and I want to point it out. And I shouldn't even use the word actually. They make a solid point here that is really, it really is. So let's look at it really quickly. So Galaxy Digital Capital Management, leader in digital asset investing, says Bitcoin's mainstream market presence is on the rise with more growth potential than gold. Although precious metals has historically been investors' favorite time-tested, reliable safety net against financial uncertainty, Galaxy Digital says in a new report that the recent investments in Bitcoin from macro investing legend Paul Tudor Jones and tech giant MicroStrategy highlight Bitcoin's attractiveness as a potential hedge against inflation. With a market cap of over $200 billion currently, Galaxy Digital says Bitcoin still has tremendous room to grow. Gold's market capitalization is currently $12 trillion. Bitcoin's value, on the other hand, is currently around $200 billion, less than 2% of the gold market. That presents a potential greater than 60 times market expansion opportunity if Bitcoin grows to gold's level as an alternative digital store value asset. Now, listen, the thing you have to say to yourself is, if Bitcoin grows to 60x to that 12 trillion cap at some point, you have to ask yourself at that point, well, what's the size of the gold market going to be? 24 trillion? 50 trillion? Because I don't believe that gold's actually going to go down because of Bitcoin. I don't think so. I think people really are going to just flood into this because, again, to the point that they made, it's, as a potential hedge against inflation. And, if they can buy fractional amounts of it and they feel good about the tech and they know, look, this is easy to move around and it's easy for me to convert and I can spend it, this is going to happen. So that gets pretty exciting. So then it leads to the overall conversation and the understanding of what are we talking about here? Because you're talking about $12 trillion, and I don't want to seem casual about this, okay? $12 trillion is a lot of money. $200 billion is a lot of money, okay? $200 is a lot of money at my house, I can tell you that. Especially if it goes missing. But the reality here is this. Look, $200 billion is nothing to sneeze at. Now, against a $12 trillion gold market right now, sure, I get where people could say it's still not for real to me. But, you can't really turn a blind eye to this because here's the deal. We are at a convergence point. We know from the regulation we just talked about that there is something very, very big at play for cryptocurrencies widely, and it is exciting. Now, with that being said, we have to recognize what would it take to get you a $12 trillion market cap for something like Bitcoin, or hell, just overall in the crypto market altogether. When you think about that, I start thinking to myself, use case. It can't just be, a store of value, albeit that is a great reason to have it. Because that's a great reason to have gold, isn't it? And that's not financial advice. But the reality is history's told us that about gold. And I believe it could tell you that again about something new like Bitcoin that is revered much in the same way. Now, with that being said, I think in order to fuel that fire and to push that desire for people to be in this space, I think what you really have to have is the gaining traction of the Internet of Value. And what you're looking here is a diagram of the Internet and the many different protocols of the Internet. You can see here there's the IP protocol, the TCP protocol, the UDP, the P2P, the RTP, RTCP, the SIP, the HTTP, the POP, IMAP, SMTP for simple mail transfer protocol, right? So all of these different protocols make up the internet that you and I use every single day. We don't even think of it anymore. Well, here when we talk about things like Flare and Ethereum and the XRP Ledger, and the idea that Flare is going to build a two-way bridge between the XRP Ledger and the Ethereum network, and the comments from the gentleman from Algorand talking about how gas fees for Ethereum are too high. Well, he didn't say Ethereum directly, but gas fees are too high for smart contracts. They got to figure out how to do it with stable coins. Well, I would offer to you, from what we know of Flare Network at this point, that's exactly what they've done with the Ethereum rails by being able to avoid a lot of those gas fees of the Ethereum token by being able to build that two-way bridge between the Ledger, the Flare Network, the Spark token, the minting of the FXRP, and the Ethereum network. This, to me, looks a lot like the early days when we had IP, TCP, UDP, and then simple mail, right? And then we got these other layers as well, right? So to me, this is looking like the formulation of that core existence of these main protocols that will be in addition to these protocols here that will be interoperable with these protocols that allow for trillions of dollars worth of value to flow through this system comfortably. And that will ultimately bleed out into the market of cryptocurrencies as the use case utility begins to solve pain points for the many different industries in this new space, in this new Internet of Value. All right, guys, that's going to do it for me. I hope in some way we've been able to really just shine a light on things by looking at the current protocols that we got now, what we see being built, and that interoperability is absolutely the key to determining who is going to be used more than someone else. Because if you don't have the interoperability, you're going to have a hard time building the Internet of Value if it's not working in harmony, just like this. That's going to do it for me. Hit the like and subscribe. Make sure you share with somebody you know. I'll catch all of you on the next one.